Hey, what's up, everybody? It's Blake here with Trade Chaser. In this week's video, we are going to get you prepared for the week ahead, give you some of my favorite trade setups. And if you guys like this video, make sure you hit the like and subscribe in the bottom right. Without further ado, you guys know none of this is financial advice. Let's go ahead and get started. As always, we're going to start in the higher time frame to get a better perspective of what's happening in the general market. So one of the things that I want to point out here is that the S&P 500, the SPY, actually is holding above the 10 period moving average. And you guys know that the 10 SMA is one of my favorite indicators. It's a moving average that really helps me identify the direction of a trend. Our particular trading style, we like to capitalize on the trends. And as long as by the end of the month, we can close above this previous May's high, which was 306.84, we will be in a brand new uptrend on the monthly time frame. So that is very positive for long-term investors. As long as we can close the month above last month's high, 306.84, things are looking really positive. Now, if we go ahead and move to the weekly time frame, this past week was a very bearish week just from a candles perspective. But let's break this down a little further, okay? You can see the 10 SMA is still sloping higher, so we're still technically in an uptrend on the weekly time frame, which is very positive. The MACD is still rising, and the RSI is still above 50. So, the odds are still in the favor of the bulls, but the bears made a good run at it this past week, and we're going to have to see what next week brings. So let's go ahead and break that time frame down now into the daily time frame. Those of you that follow me, you guys know that this is the primary time frame that we trade off of. This is all of our swing setups. This is all of our trading decisions are based on the daily time frame. Now, a couple things that I want to point out here. First off, we have this uptrend line from the recent lows back in March 23rd, and you can see we're still holding above that uptrend line. Now, there's a couple areas of confluence here of support. So we have the 200-day moving average. All right. Now, the last time we tested this 200-day moving average was on May 26th, and then we hammered off of it on the 27th. And I believe that was a Friday because I made a video that this was a very significant day in the market because we actually hammered off the 200-day moving average and confirmed price strength above this candle's high. So that was a very positive signal, and it did get us long in this market, and we were able to capitalize on this very aggressive uptrend. We had a phenomenal month so far. The model portfolio just this past month is up over 100%. So we're doing very well in that model portfolio. Now on, let's see, this is Thursday, was a very bearish day. All right, we actually gapped below the 10 SMA and just sold off all day into the 200-day moving average and actually closed below it. So that was a very bearish signal to the market. Now on Friday, we gapped much higher and then kind of throughout the day just kind of sold off and trickled off, and then towards the end of the close, pushed off of this 200-day moving average, and I really liked the way that we closed. Now when we closed on Friday, this bottom wick, these are buyers stepping in and quote unquote buying the dip, or it could be short sellers that are covering their short positions. Okay, so this is a very positive close. I know it's a bearish candle, but it's a positive close on Friday. Now we do have a MACD bearish crossover, which is telling you the momentum is now slowing or moving to the downside. But check out this RSI. It bounced off this 50 level, and that's because we got this this nice close on Friday to push off of this 200-day moving average, and we closed above the trend line. Now let me just go ahead and pull up a VWAP for you. Now this is a anchored VWAP, and what this is an average volume by price from a certain point in time. I'm just going to clean this up a little bit for you guys. So what we have here, this VWAP is telling you where the volume weighted average price is. Okay, so it's similar to a moving average, but this is a very strong VWAP because this is anchored from the reversal low. You can see this is where we reversed off of this trend line. Looked like we wanted to start selling off, but this was a reversal candle, and that's what really kicked off this previous uptrend. All right, now the fact that we closed above that on Friday is very significant, along with the fact that we closed above the uptrend line and we closed above the 200-day moving average. Okay, so these are very, very positive signs for a bounce. Okay, now I'm not predicting that's going to happen. However, we did take a small bite of some TQQQ calls just because I liked the way that we closed. And, provided there's no weekend headline news risk, I do think that, we probably do gap up on Monday just from the look of this close and all of these areas of support on this 300 level essentially on the SPY. So that's very important. Okay, so if you're a long-term investor, if you're looking to you know buy some stocks and sit on them for the long term, this 200-day moving average, this 300 level on the S&P 500 is a great place to go ahead and load up. All right, now that 200-day moving average is a very strong moving average. If we zoom out on the daily time frame, you can see that when we break above the 200-day moving average, it is a very strong support area. So support here, support all through here, and then we finally broke through it when the coronavirus hit. Now, we did break through it back on May 27th, tested it on the 29th, and that was the kickoff to this uptrend. And so this is a very important level. Now, one of the other things that I do want to highlight here is you can see I have the volume by price. So this is a volume indicator, and it tells you where shares have traded hands. Now you can see that we have basically two really key important levels if we're anchoring this from the all-time highs. Very key important levels. This area right here, the basically the 280 to the 281 area. Okay, this is a very important level. If we lose this 280 area, I do think the odds favor that we roll over and we start a bear market. Unfortunate as that sounds, that's what the odds favor if we lose this level. Now, the fact that we have another volume shelf right here, you can see, okay, here's our first volume shelf. Here's our second volume shelf, right? Lots of shares have traded hands. And you can see that's right where price is trading right now. Okay, so this could be a very good area to go ahead and quote unquote buy the dip and see what happens. All right, I'm not predicting anything like that to happen. We trade the trends. And right now, technically speaking, we are in no trend. All right, and in no trend, we like to preserve capital and year-to-date gains. That's the number one priority in no trend. All right, now when we're in uptrend, here's an uptrend. All right, this isn't all an uptrend. Here's a new uptrend. All right, now we're below the 10 SMA and we haven't confirmed price weakness. Now, if we confirm price weakness below this candle that broke the 10 SMA, below 300, if we close below this 300 level, that would confirm price weakness confirmation, and that would move me all to cash and potentially even start to look at shorting the market. So right now we are at a make or break level for the S&P 500. This next week is going to be extremely important just because if we're looking at those higher time frames, we can see the significance of getting back above that 306, 307 level on the monthly time frame. And then we've only got 2 weeks left in the month. So, these next 2 weeks are going to be extremely important. Now, next week is OPEC. So it's monthly option expiration. So there's a lot of trickery that goes into OPEC. So be very careful, be very cautious. This could be the start of a brand new huge downtrend. We got maybe this second wave and this geopolitical unrest going on right now. So we're just gonna have to wait and see. But if we can get back above the 10 SMA, I think the odds do favor that we do push a second leg higher and probably do test these all-time highs. So that's the S&P 500. That's what I'm always looking at. This is my guide. When we're trading, there's always two variables that I like to look at, and really three. I like to watch the volatility index as well. But when we're making trades, we like to have the market in our favor. Okay, so if the S&P 500, the overall market is showing that it's slowing down, maybe some short setups are happening in the overall market, but you're looking at a stock, individual stock, it could be Tesla or whatever, and it might have a phenomenal trade setup. But if the overall market is not in alignment with that stock and the market looks like it wants to pull back, Well, it's going to drag all those stocks down. So it doesn't matter if the stock has a great setup, if the market isn't setting up to be a great setup as well. And that's a phenomenal example was Tesla. So let's go ahead and take a look at Tesla. Now, we actually took Tesla for a trade. Um, the entry price was a break above this candle's high. Okay, so 8.99. Well, guess what? We never got that 8.99 entry because we gapped up on Monday. Tuesday kind of was an inside day, doji, and I didn't really love this risk reward. Well, the next day it ripped higher, and the S&P 500 was showing signs of slowing down, and Tesla just came all the way back and needed to fill this gap and test this 10 SMA. Now, do I like this setup now? Yeah, I actually do. I think this is a good buy the dip scenario with this 10 SMA, provided the S&P 500 holds that 200-day moving average and holds that uptrend line in the anchored VWAP. I do think this is a great setup, and I do think Tesla is one of those stocks that will continue to move higher so long as the S&P holds that 200-day moving average. Now let's go ahead and talk about tech. All right, Nasdaq. The Nasdaq has been the leader. It's been the leader for many years now, actually. But let's go ahead and take a look at it. The all-time high was this level right here, the 237.47. All right, so we actually broke above that level on a confirmed breakout on June 5th. Continued to run higher, and then on Thursday and Friday, we actually did close below that breakout level. So that's a very important level to watch. If we can't get above that breakout high, then I do think the Nasdaq does probably come back into some of these volume ranges, the 230, maybe even the 221, the 218 levels, to retest some of these so it can reset and potentially make a run higher. So I'm really watching to see if this price can get back above that breakout high, and if it can, then I'll go ahead and add to our position. But until then, I'm being extremely patient. All right, now two things I want to look at is gold. You guys know that gold has been a great performer this entire year. You can see on the monthly time frame, it's just a nice rip higher. It's holding the 10 SMA, but you can see this RSI is extremely overbought. Okay, so on the monthly time frame, I could see some sort of pullback, maybe towards that 10 SMA. The weekly time frame, you can see the RSI is actually moving lower relative to price. Okay, so if the RSI is moving lower relative to price is moving higher from those same levels, that's bearish divergence. Okay, so that's an indicator that could say, okay, hey, you might want to be cautious here because we are seeing some divergence with respect to momentum and price. However, last week we did close above that 10 SMA. So as long as we still hold that 10 SMA, we can have divergence all day. It's all about trading price. Now, in the daily time frame, you guys know this is the time frame that I like. We have this consolidation box. Let me just go ahead and move this in here. So we've been trading in this range right here, essentially from April 9th. Okay, so this was a very bullish run up, and then we've just consolidated in this range since April 9th, okay, for the past 2 months. Now that's significant because we have 2 months of consolidation without price breaking down. Okay, so that's a bullish continuation pattern. And you can see we have a ton of volume right around this where we've been consolidating, right in the middle of this range. And it makes sense, right? So if we can break above this range, the 264.50, 264.37, I do think gold does make that next leg higher, and with something that we really need to keep a close eye on. Next thing I want to take a look at is bonds. All right, so bonds look, they're sending mixed signals. Okay, so bonds, I have this anchored VWAP, which is from the highs. All right, this is the reversal pivot high. So I have a average volume by price from that reversal high. And you can see on Friday, we actually looked like we wanted to come up and test it and then got rejected lower and came into this supply zone, this volume shelf. When if we're trading below that, it's supply, and above that, it becomes demand. Okay, so this is a supply zone so far. And you can see that RSI kicked up above 50, and then made a turn south. I like to see that because if bonds and stocks typically don't move together. So if bonds are moving lower, equities will typically rise, and vice versa. So the fact that we had an attempt to this zone and then sold off, I like that setup. Looking at the overall market with the S&P 500 holding this trend line along with this anchored VWAP and making a bounce off that 50 RSI, I think that's a positive setup heading into next week for a potential bounce play. All right, so that's pretty much all that I have for you guys today. I hope you're really enjoying your weekend. I'm going to be hitting the beach tomorrow, so you might see me next week with a little bit of a tan. And make sure you guys like and subscribe, and I'll see you again